We are live, and I'm just realizing I have some housekeeping to do. But before I get started, Leon and I have gone away. We're doing a mastermind with one of our David Curry. He's over there. I can't see him, but we're in a cabin out in the mountains. So if reception is spotty or if it freezes, just bear with us. It will come back on. We do have some really important information for you all to talk about. So again, please share. If you have comments, comment. And we'll answer any questions that you have during the duration of this live. So if you listen to the podcast later on and you have questions or comments about what we list, please put it into the comment section and we will get to it as we can. So we're going to start today. We're talking about the wealthiest 10% of Americans own a record 89% of all the U.S. stocks. And Leon's going to tell you why we chose that topic, why I'll do what I normally do, some housekeeping.
Yeah, so this topic is when I was stunned, but I was actually surprised that it was that high. I didn't realize it was that the top 10% owned 80 of all stocks. I thought it was less than that. But about that, think about that what it is actually. So the top 10% country own 89% of the stocks. So everyone that follows us in IA or members of IA knows that Brent and I, our biggest thing is like the stock market, and it's proven is the largest wealth generator in the history of mankind. And we're trying to spread this knowledge to our community and other communities to make that point. But if you think of rich, already know that, right? So the rich, they own 89% of all stocks in the United States. 89%. One of the things that us that that aren't in the top 1%, we always try to do follow what the rich do. We try to buy real estate, we try to start businesses, but for some reason a lot of people just shy away from the stock market, which is why again they own 89% of all stock in the United States, which is to me is a ridiculous number. So we bring this topic because we think it's really important to show how, again, the rich, one of the things that the rich do is they own stock. They own stock hugely. We're going to show you today how not only do they own 89% of all states, they are profiting huge by the stock market where we're not. And again, when I say we're talking about the outside that 10%, the other 91%, 90%, yes. How we're not making anywhere near as much as they are because again they own such a huge share of the stock market. So Brad, you can put slide one. Yeah. So the slide is going to show is actually going to show a kind of a stunning number. So on the once Brent pulls it up. So on the left hand side, okay. So what this chart is showing, it's titled the distribution of stock wealth for the Q2 of 2021. So Q2 of this year. And it's crazy, right? So again, we know that the top 10%, richest 10% of the United States own 89% of the stock. But let's look now at the distribution of that wealth. So the top 1% are earning 54% of all the wealth generated in the stock market. The top 10% are earning 35% of all wealth generated in the stock market. And look to the far right. The bottom 9%, which is generally us, we're only earning 1% of the returns in the stock market. 1%. So, I mean, again, what does that mean? What are the rich doing? The rich are plowing their money into the stock market. During the pandemic, and we're going to show you in a minute the amount of money they made in the pandemic. When a lot of regular investors or general investors like ourselves, a lot of us did join the stock market the pandemic, but a lot of us didn't, right? A lot of us lost their jobs. A lot of had to take money out to take care of their families. They had to home school, to buy food, just kind of live during the pandemic. Rich folks, they took their money and plowed it into the stock market. The market dropped 35% in 30 days in March of 2020. That was the fastest drop of the stock market in history. And it also recovered the fastest too. It recovered in about a month. That was the fastest recovery in history as well.
Now, real quick.
Oh, yes.
So how does this affect me? Why do I care? Number one, too many of the 90% are keeping their money in savings accounts because we feel like it's. In addition to that, there are a number of reasons, many minorities call what it is. The bottom represent a huge portion of minorities and people who actually have never been educated on what wealth is. They're putting their money in places they know. They're putting their money in places where they can actually feel it in their mind. Savings accounts. You really can't touch or see your money in a savings account. But for some reason, it's been plowed into our brain that is safe. Regular people do. They go to work, they put their money. You are not accumulating. Actually, you're losing money very slowly. You're guaranteed to lose money very slowly because you're not even keeping pace with inflation. But then let's look at the other reasons why money into the stock market. Historically, and let's just go back to 1929 when the stock market occurred. What happened? They shut down the market, circus triggered, and it wasn't even circus. They just shut down the market. And they said, okay, some of you all will not get any money back. And most of the people that get any money back were minorities and people who were marginalized. And then you have a situation where people start putting in real estate, and we got to that market in about 2008. And then the bubble happened, and the rich were already aware of the bubble and maneuvering beyond it. And we were stuck just with the information that was left, which left us losing some of our homes. Historically, and I say that to say historically, we have gotten the short end of the stick. To the point where even when you were trying to in stock market in the 50s, if you were a person of color, you couldn't. It was very difficult. You had to be exceptional, or you had to have like a very solid connection with somebody who would help you purchase stock. So all that led to an education gap. Now the education gap is, to me, it's the biggest reason why we don't invest in the market. With all experiences that created negative feelings towards the market, we now just don't have the education. We never sought the education. We didn't believe what we're saying when it came. We've never really, our closest friends, often birds of a feather flock together. So many of our friends don't in the market. So we don't have regular conversations. We don't have education that we understand, right? Because there also will be brokers who will come in and talk very high level about the stock market and use words that were just useless. I mean, unnecessary. So we just shied away from it. It wasn't for us. That's what we said. That is the reason the distribution of stock wealth, the top 54% went to the top 1%, 35% went to the top 10. The bottom 90% receive 1% of the wealth from of stock. 1%. Like, if you all don't take the information that I give, please look this up on your own. Look up what the greatest wealth generator. Google it. That's not us. Google it. Is in market. It might real estate might pop up in entrepreneurship. It's gonna be one of those three. Which one are you doing? So, I mean, before we go into during COVID, the wealth gap was already horrible. We're talking about minorities in this United States of America couldn't the top 1% for 200 years. COVID just made that worse. And we're going to show you some of the numbers.
So like about it. So if you have $100, right? Out of that $100, 54% are going to the top one. 54 is going to the top 1%. $35 are to the top 10%. And think of the bottom 90% are splitting $1. They're taking that $1 and splitting that amongst millions of people. So that shows you how the distribution of wealth is so lopsided right now. Imagine taking $1 and cutting that up into 50,000 different pieces, and everyone getting a penny or less. That's essentially what's now in the stock market, the distribution of wealth. Again, because we're not putting our money in the market in the size that we should, and the rich are. And I said, when the market dropped, they saw it as a huge buying opportunity. And if you go to the next slide, I'm going to show you actually the how the disparity that was made during the pandemic.
And before I go there, some of you all are going, of course they did. They have discretionary income. They can take the risk. That was true at a point in time. Now you have what's called fractional shares. Fractional shares gives pretty much anybody the ability to get into the stock market at their level. So again, before there was that wall where you had to buy the entire share of whatever it was you wanted. And let's take, for instance, Amazon. You're talking stocks that are over $3,000. Now, can you buy it at one time? Can you just purchase the whole share? Do you have to do that anymore? No. So for all of you all who are watching, going, okay, that's what you just said, but they have money to spare. We don't. So I've been out with some of you all who don't invest in the stock market, and we go to the bar. Then I've been out with some of you all who we went to dinner. You don't invest in the stock market, but you're eating out. It only takes what, $10, $5 to start it. It really takes $1. But I'm just saying, realistic. Yeah, like $5, $10 over time if you continue this dollar cost averaging. But we're not. simply, I want to remove the excuse. Of course, it's the top 10% or the top 1% because they have money to spare. That is no longer an argument. They may have more money to spare, but people who are watching these lives or listening to our podcast, you can invest, and you've been thinking, you haven't pulled the trigger. You thought, oh, it's gonna take too much, so you just ruled yourself out. We're trying to remove those excuses so you can have a better future. It is not simply talk because we want to talk. Hopefully you device, and we're going to happen during COVID. But before anybody saw that and said, well, they had the money, I want to remove that excuse.
So all right, so this was showing the pandemic Q4 of 2018 and through Q2 of 2000. So we're talking essentially a year. During the time, the top 1% in the stock market, they made 43% return on their money, or 40% of the returns in the market. The bottom 90% had to put up 33%. So the top 1% made 10% more than the bottom 90%. Why? Two reasons. One, their the percent isn't in as large numbers, and two, where the bottom 90% investing as large as the top 1%. So this can be a bit misleading. You're saying, like, kind of like what Brent said, that the top 1% has the money to do it. That's true. But that 10% gap shouldn't be 10%. It should be 4 or 5%. The problem with that is that, again, the bottom 90%, which is us, a lot of us are not investing in the stock market in the numbers or the size that we would. I mean, like we just said, you can put in 10, but like Brent just said, let's go out to the bars, go out to dinner. We'll drop 2-3 at a drop of a hat for a meal, or to buy some noodles, or to buy some clothes. But when it comes to the stock market, dropping that same dollars, we suddenly don't do it. And that's, again, why this number is so wide. This 10% gap is so wide, is that we're not investing. That bottom 90% is not investing in the size that we should. So they killed it. They killed it during COVID. They made 10% more than we did, or 43% of the gains in the stock market was made by 1%. And then the bottom 90%, again, has to split up that 33%. That has to go up to people. So, when they sound like a big number, it can end up each person averaging out to making like $100, maybe making $1,000. With that top 1%, where there's only quite a select those people, profits could have been $2-3 million because they're only splitting that amongst
small population.
Yeah, small population, right?
And then also too, some of you are thinking, like, do you guys really like live what you're talking about? We're staying in Airbnb right now, and I know I own Airbnb stock. You own Airbnb stock?
Yes. Yep.
So we both own Airbnb. No, he owned it, but before we move,
you check to make sure because you own it. Yeah.
Like, one of us are going to own the stock. And it's a high probability, like the cars we drive, the things we do, the things that we do. So, just think about this. When you move to life, next time you stay at Airbnb, are you part owner in the place you're staying in, or the technology you use to rent it, or are you a consumer? And again, it's nothing wrong if you're just a consumer, but just educate yourself. These things are possible. Leon Dunn, as CEO at I'm not on the executive team, but I own a small sliver of the company. Mm-hmm. And more money goes into this company, the chance is somewhere is going to hit me. Mm-hmm. So at least I'm in the game. And the one thing personally I don't care how big you are of, let's just say, the Washington football team. Biggest fan there is. You are the biggest fan of the Washington football team. You go to every game, you go to watch them in practice. What's the one thing you can never do?
Play the team.
No, but it's a pregnant pause. It's called a pregnant pause. Sorry. Yeah. No, the one you never do is you can never win the game.
Okay, yeah. Playing the team, win the game. Yeah. Okay.
You can never.
Right, because you're not yet. Yeah, because you're not on the team.
You're just cheering.
Yeah.
You're a fan. But if you are just a fan of the market and you watch us because it seems cool or you want to support us, we're good.
We appreciate that. We appreciate that.
We really are doing this. We want to create change in our community, and we want the people who listen to us to leave a little upset, maybe sometimes a little insulted, but it's from a good place. But more than else, you should be educated that there's a different way to live your life, a different way to treat your money, and a different way to have. So, David Curry, and we were talking on the way up here about, certain people's relationship with money. And if you can understand, and I actually challenge everybody who's listening to this, take a moment after we're done and really think about, what is your relationship with money? Do you feel like every dollar you get is just to buy something, or is every dollar you get a potential employee that you put to work? Or is every dollar you get maybe split up? Some of it's just to have fun. Some of it's to become a new employee of mine. Whatever it is, think about it and think about how you can improve.
Yeah, and I just want to make this last point that so like inside the membership, I posted how and I let our community know. Last week I had one of my best of the year. My portfolio returned 11% last week alone, right? And now think about it, the reason why that's significant is because the stock market on average returns 10% per year, on average per year. If you add in dividends, it does about 12% per year.
Oh, you said you did what last
so
week?
11%.
Is that counting crypto?
That accounts crypto, yes.
No, you did 14% like 2 days ago in the crypto.
Yeah, but average up,
cool.
Something's wrong, something's down. So I mean last week in my portfolio, and I can only be done, like Brent said, via crypto. I'm in crypto, and I let everybody know I'm in crypto. I'm in the stock market. That can never, and I basically made last week in what the stock market on average returns per year. That can never be done in a savings account. That can never be. Well, I can't say it can be done in real estate, but it's rarely be done in real estate to flip a property. It can be done. People flip all the time, but it's typically rare that you'll get that type of 11% return in a 5-day period. And I did it last week. And again, interest rates in savings accounts right now 0.05 to 0.06% on your money. It would take thousands of years, and I did the math. It was like 1,400 years or something for your money to double.
Can I tell what I did?
Yeah, tell me what you did. Yeah.
All right. So for anybody who cares, actually not even gonna say it on this platform. If you come over to the Facebook group in the next couple of days, I'm going to post the number for the rate of return I had over the last 3 months. And if you want to know how I got it, you have to specifically ask me. I will not. I'm just going to tell them. I'm just going to post the number. And if you want to know, I'll tell you, but you have to ask. And the reason I'm doing it that way is because so many of us just don't ask. We have all the resources around us. We just don't ask. And it's a waste. It's an absolute waste. Because one thing I can tell you, and again, I'm going to David, Leon, it's no time in history, can I say, if I knew they knew something, then ask them. If I had a curiosity about something, I'm called to think no, and who also will give me the answer. Who are you calling? Who are you asking questions to about the market? Cool to watch this and then go back to a friend who has no connection to the market. What's going to happen after that? It's going to fizzle,
and then take no action, right? Yeah. Like, I mean, that's one thing I talked about. We talked about this week inside the platform too. Like, it's great that we're putting this information out there. Like we always say, hey, Brent and I are going to be good because we're. I mean, like I said, I did 11% last week. I basically made more than the market returns in 1 year.
Hey, real quick, Leon, he back because I'm telling you, he took about a crypto like Monday that I bought Monday, and it's already up 14%.
Yes.
So I'm trying to figure out how your numbers are, what they are.
No, I know it's just last week. Remember that crypto was Monday.
This week. So he's already done 14% this week.
Yeah. So there's a crypto that we talked about in our crypto group that was up 14% today. Great return. Today. But I'm referring to again last week, and that was with crypto and stock up 11%, and which again showing what's possible, and we need to take action to actually make these possible. So no, everyone has to have a rainy day fund, money sitting in a account, but anyone's investment dollars should not be in a savings account. If it is, you're literally losing money every day, as we say this all the time, because of inflation. And right now, inflation is running. I mean, I don't know if y'all saw this. Google this. Social Security, the social payments are going up this year, either this year or next year, by about 5%, because of the rate of inflation. And so, Social Security keeps up with inflation. This is the biggest boost to Social Security check, I believe, in 50 years, because inflation right now is running rampant. So if your money is sitting in a savings account, it is getting decimated, absolutely decimated. Moreover, typically, way more than it typically does if it was just 2-3%. Inflation this year is running at like 5 to 10%. And like I said, Google what's happening to Social Security payments that are going out soon, how much of a boost they're getting because of inflation.
Yeah, it's still a line from Les. We're telling you this to impress you, but to impress upon you the importance to action.
Yes.
And I'm gonna say, in the last 2 weeks, I made enough in just crypto alone pay off my car. And if people just sit and think, oh, it didn't happen to me, there's not a whole lot we can do, but we're doing everything we can, because look at these numbers from the pandemic. And the gap is not getting narrower.
Right.
It's getting wider.
Because not enough of us are taking action.
Yeah. So I mean, that's really all we have for today. We are going to go do some hanging out, to be honest, and relax. And then tomorrow wake up and probably go for a hike and possibly some canoeing. And we will do some masterminding about business. Why are we telling you that? Because we worked our butts off early in life so we can do stuff like this now. And our money is working the entire time we are not.
Right.
So then what's going on with your money and how you're living, because you have a chance to correct the ship or increase your distance. If you're doing well, increase your position. We still a place for you inside the Investing Education Academy. The information to connect to us, if you're listening to the podcast, you can go to www.iapodcast.com. Connect with us, join the community. We look forward to seeing you inside. If you're interested in becoming an IEA crypto bull, just contact Leon or myself. If you want to join a Facebook group, you can go to Facebook and search Investing Education Academy, and we will pop up. So we owe you 2 stock picks. We are not giving them to you until tomorrow.
Yeah.
So
Right.
we're just letting you all know we're still going to do the same thing tomorrow with group, and we're going to put the other into the membership platform. So thank you everybody for being with us, and we will talk to you all next week.